welcome to Smaulgld's Physical Gold Ownership versus Gold ETFs. This is a blog post I did back in July 2016. Thought I'd do a YouTube to update it. So gold ETFs versus physical gold, which is better? Well, gold ETF shares provide exposure to price of gold, but they do not give you gold ownership. Let's take a look at the difference between insured and vaulted gold versus gold ETF shares. Now, most people, there's two types of people that buy gold. Those that buy it for insurance and those who buy it for the exposure to the price. They want to make a profit as the price rises. And there's those people who want to have it in the case of bad outcomes, emergencies, and so on. And they also want the price appreciation as well. So if you're buying gold for insurance against bad outcomes, exchange traded funds have three major issues. So first, if the stock market closes or there's a bank holiday, you have no access to trade your shares, your ETF shares. And when the market opens again, the price of gold could be dramatically higher or lower. So you may not be able to benefit from your correct decision to buy gold, supposedly, if you purchase it in the form of an ETF. If there's an issue when the market is closed, you can't cash out, you can't get your shares. So buying gold for insurance against a bad outcome, well, when you have bad outcomes, stock markets close, banks close, and so on, and therefore your gold ETF is as good as if you just held a share of Snapchat or some other stock. Two, you have no access whatsoever to ever take physical delivery of any gold unless you buy an inordinate number of shares. That's especially true for the largest ETF, a GLD. The distinguished ETFs versus funds that actually purchase the gold and allocate a portion to you. We're talking about ETFs here, where you buy a share, it represents an amount of gold, it represents the price of gold. But unless you buy tens of thousands of shares, millions and millions of dollars worth of those shares, you have no access to the gold. And even if you did own that much, you have to go through a special process and ask the trustee, excuse me, to create these baskets for you. It's a very complicated process. Of what I've heard, they don't always come through and provide you with the gold. So if you are buying an ETF with the understanding that somehow you have gold, you do not. Now, not owning gold, some might argue, is an advantage. In good times, the ETFs covers your storage and insurance, and you don't have to pay for that. And if the price rises and there's no emergency, you can sell it. And you can sell it very quickly. You don't have to bring it anywhere. You don't have to make phone calls. You don't have to arrange for delivery. You just, as you purchase the ETF, just as you purchase a stock, as you bought it, you sell it. Now, in a bad time, obviously, that's a disadvantage, especially if the stock market is closed and you can't sell your gold ETF. Now, another issue with gold ETFs is the potential of mismanagement and bankruptcy. The reason you buy gold for insurance is because gold doesn't have counterparty risk. It just sits there and its value resides in it being gold, not in anyone having to do anything to it, for it, or to enhance it like a company. Gold is gold. However, a gold ETF is not gold. If the ETF is mismanaged and goes bankrupt, you've got a claim just like you would have on any other company. You don't have a claim on any particular amount of gold. If, however, you buy allocated, vaulted, insured gold, this is still involving a third party. However, if they store it outside the banking system, in the event of a bank holiday or a stock market closure or bankruptcy of the depository where your gold is held, the title still resides with you. So when they resolve the bankruptcy issues, they will deliver your gold to you. So if you want just exposure to the price of gold, then the gold ETFs are fine as trading vehicles. The problem I have with that is that if you want exposure to price of things, there's plenty of other stocks you can buy that give you exposure to price. That'll probably do better in the short term. But if you think gold is going to go up and you want to buy it for the 2-week, 3-week, 2-month period and buy and sell it, the gold ETF is fine for that, provided you have no anticipation that you're going to get any gold or that your gold will ever be available to you if you ever needed it. Now, if you do want gold, You can buy gold through the Smaulgld links. You can have it delivered wherever you like. We have affiliate arrangements with SD Bullion, BGASC, JM Bullion, Golden Eagle Coin, and Money Metals Exchange. It's one of the ways Smaulgld helps pay for the site. We get a small commission on every sale that occurs through the site. You can buy your gold or silver. It's not investment advice. It's through Smaulgld, and we get a small commission, but you pay no more, no less than if you visited those sites directly. So please consider purchasing your precious metals through Smaulgld. Also, please consider donating to Smaulgld via PayPal or becoming a Patreon or Bitcoin. Now, let's take a look at these gold ETF holdings. As you can see, it is a very, very popular way of owning gold, supposedly. There are about 70 million ounces of gold in gold ETFs, the largest one being GLD. Now you can see this chart is from last year, for July 2016, when from January up till Brexit, gold was very popular. There was large inflows, about 10 million ounces, 15 million ounces went into the gold ETFs. And then as the price sold off, we lost about 10 million ounces. And then this year, there's been an increase now in gold ETFs. So they're back to about 70 million, about where they were last year, holdings in gold ETFs. Now, let's look at what GLD and SLV say about their ETFs. This is directly from the gold ETF GLD prospectus. SPDR gold shares are intended to offer investors a means of participating in the gold bullion market without the necessity of taking physical delivery of gold, and to buy and sell that interest through trading of a security on a regulated stock exchange. The launch of SDR gold shares was intended to lower the barriers, many of the barriers, such as access, custody, and transaction costs that have prevented some investors from investing in gold. So clearly they're saying straight up that it's a feature, not a flaw, not to take physical delivery of gold. They're offering you a way of getting exposure to the price of gold, but they are not, and it's an interest, it's not gold itself, and that's the way that they market it. And for many fund managers, hedge fund managers, large investors who don't want to deal with the delivery issues, don't want to deal with the vaulting fees, they figure, look, if the price of gold goes up, I'm going to get the benefit of it anyway, because if I had the physical gold and I went to sell it, I'd only convert it back into fiat for purposes of the fund. So therefore, what's the point of owning the physical gold? Now, that has held sway, and that is the gold ETFs are the most popular ways to buy gold, as are buying futures COMEX contracts, because most fund managers are not interested in protecting themselves against bad outcomes. They're just interested in getting a return for their investors. The fees are lower when they buy ETFs, and they can move in and out of their positions without having to arrange brokerage and storage fees. SLV is the same thing. It's a silver ETF. They mention that they give you exposure, emphasis added, not ownership, to the day-to-day movement of the price of silver. Now, ETF promoters view the ability to own gold without actually owning it as a feature, which if you're just trading it, that's fine. But it is a flaw if you want ownership or possession of your precious metals. Here's my analogy. Gold ETFs are akin to buying water futures for price exposure on water. That works unless and until you need delivery of the water in case of a drought. Then all you have is a claim on water worth an amount specified in fiat currency, but no actual water to drink. So that's how you have to make your decision, is whether you actually want, why you want the gold. If you just want it for price exposure, GLD is fine. If you're looking to protect yourself, to provide portfolio insurance, to have something that you can use and trade in an emergency, then the gold ETF is not for you. Thanks very much for listening.